Vanguard just made these ETFs way easier to buy. What's going on, my savage? Hit that like button, subscribe, and share, and tell your friends about that Brown Town opulence, man, where we talk about the stocks and crypto and what's going on in this market world. I'm telling you right here, man, Vanguard done made it easier to buy some of its top ETFs. If you don't know what an ETF is, man, it's an exchange traded fund where you basically buy a basket of stocks. Vanguard today announced plans to execute forward share splits for five equity index ETFs. The share splits will be effective on April 21st, 2026, and are intended to widen availability for investors by keeping share prices within accessible trading ranges. Vanguard periodically and digitally assesses its ETF lineup to determine when and where share prices would most benefit investors' outcome. A number of factors are considered, including ETF market price, bid-ask spread, and trading volume. These five ETF meets Vanguard standards for executing a share split at this time. Now, these are the ETFs that Vanguard are doing a stock split on. Then I'll explain what a stock split is in a minute. But Vanguard Growth ETF, ticker symbol VOOG, will split to a 6-to-1. Vanguard Mega Cap Growth ETF, ticker symbol MGK, was split 5-to-1. Vanguard S&P 500 Growth ETF, ticker symbol VOOG, was split 6-to-1. Vanguard Mid Cap ETF, ticker symbol VO, was split 4-to-1. Vanguard Information Technology ETF, ticker symbol VGT, was split 8-to-1. Now, I know a lot of y'all that's new to the stock market, man, or don't know what a stock split is. It's a corporation action that increases a company's total share count while proportionally reducing the price share, making stocks more affordable and liquid. Total market capitalization and investor portfolio will remain unchanged. Common ratios include 2-to-1 or 3-to-1. $100 stock becomes two $50 shares. So here are two examples right here. 2-for-1 split. If you hold 100 shares at $100, $10,000 value, you will hold 200 shares at $50 after still totaling $10,000 value. 3-for-1 stock split, a share price at $90 becomes 3 shares at $30 each. And the most common stock split you're going to see is a forward stock split. That is what Vanguard is doing, but you also will see a reverse stock split where they do the opposite. So they take one stock and they take many stocks and convert it back to one stock to raise the price. So it opposite, reduce the share count, increases price. There it is right there, to make it in simple layman terms. Now, with that being said, man, this is not financial advice. This is just for entertainment purposes only. But I'm telling you right now, you need these ETFs. You need to build a foundation in this game. If you don't know what to do, if you don't know what you're looking at, if you don't know what stocks to pick, look for ETFs to start with so you can build your foundation and you get, like I said earlier, a basket of stocks. So basically, you don't invest into just one individual stock like Nvidia, Apple, Microsoft, Google. So you buy an ETF which has a collection and a percentage of each one of those stocks. So now you get Nvidia, Apple, Microsoft, Google all in one stock by purchasing the ETF instead of buying individual stocks from those companies. And like I just told you, the ETFs, we looking at Vanguard Information Technology ETF right here. These are the top 10 holders. Like I just told y'all, you get a basket of stocks, and these the top 10 stocks that are in this ETF. As you can see, Nvidia with a percentage of 18%, Apple, Microsoft, Broadcom, Micron Technology, AMD, Cisco Systems, Palantir, Applied Materials, and Lam Research Corporation. Those are the top 10 companies in the VGT. And like I said, the same thing goes with all these ETFs. Vanguard S&P 500 Growth Index Fund ETF got Nvidia, Microsoft, Apple, Alphabet, which is Google, Broadcom, Alphabet Class C, Meta, Amazon, Berkshire Hathaway, and Eli Lilly. Then we got Vanguard Mega Cap Growth, Nvidia, Apple, Microsoft, Alphabet Class A, Meta, Alphabet Class C, Amazon, Tesla, Broadcom, Eli. Lilly. Then we got Vanguard Growth Index ETF shares, VUG. You got Nvidia, Apple, Microsoft, Alphabet, ANC, Meta, Amazon, Broadcom, Tesla, Eli Lilly. So now I know y'all wondering, like, Money Man, which one do I choose? Which one do I choose? This is not financial advice, but I would tell y'all to try to get exposure to all of them if you can. Me personally, the ones I really like is VGT and VUG. They got the most exposure to the top companies that I like, those tech companies, especially Nvidia. That was one of the first stocks I ever bought, and I should have held on to it, but that's a long story. Y'all come back and hit that like button and subscribe, and I'll probably tell y'all about it in a later video. And don't forget that I do have a video coming soon with the indicator that will tell you. I got a video coming soon with one indicator that will tell us when to buy heavy in this downtrend that we in right now. Depends on you watching this video. But back to the ETFs. Now I just want to take a look at the two of my favorite ones, the growth of these ETFs right here. Then we're going to do a chart. We're going to chart it, and I'm going to show y'all where a good entry point might be if you plan on getting these ETFs anytime soon. And then you see right here, man, VGT right here, year to date is down 9.5%. On the year is up 22%, but in the 3 years is up 23%. This is why I like these ETFs, man. You got to grow. You got a slow, steady growth into these ETFs. But as you can see right now, man, we down on the year at 9.5%, and then continuing in this downtrend that we in all the way up until April 21st, when these stock splits will happen for all these ETFs. Is a good possibility that we could even be down 15%. Because with it being down at 9.5%, we are already in that correction territory, which starts at 10%. Now, we end up going down to 20% before April 21st, then we in a full-blown stock market crash. Now, the next one I want to look at, man, Vanguard Growth Index Fund, VUG. I actually owned this stock once upon a time, but I had to sell it for some other reason. I'll tell y'all in another video. But right now, this stock is down. This ETF is down 13.3% on the year. In 1 year return, you up 11.4%. And then a 3-year return, you up 21.3%. But I'm telling you, we are already in that correction territory with VUG, and it might even continue to go down towards that 20% to where you can see this thing in a crash. But we're going to take a look at the chart and see where these ETFs, these two right here, specifically my favorites, will potentially go leading up to that April 21st stock split. All right, first up, we got VGT right here, man. It's at $680 in the market close. Depends on when you're watching this video, man. But I'm telling you right now, this stock used to be a $800 stock, and we done came all the way down on this roller coaster, on this downtrend, and looking at $680 right now. Like I said, we down 9.5%, pushing that correction territory on this stock right here, man. Let me change this real quick. So you can see right here, Monday morning, I'm anticipating a bounce on this stock right here, just because we done broke the Bollinger Band just a little bit down here. But I ain't saying it's gonna stay green all day, but it could be a green Monday for this stock, and then we continue down just based off that indicator right here. But as y'all can see right here, man, now you can use the Fibonacci retracement on this if you want to, if you know how to use it, but I don't like all them lines just cluttering up. I like to see it a little clear. That's why I do my own Fibonacci retracement. If you can see right here, just putting the lines at these different levels that they touch. That's the easiest way that I can chart this right here. So right now, we looking at this stock already below my first line, my first blue line right here at $705 right here. We already done broke that. Now we headed towards my second blue line at $670 right here, man. If we break past this second blue line, then I can see us potentially going down to 593. Now, we might not get all the way to 593 before the stock split, but we could possibly get close enough to that point to where we can say, okay, it's cheap enough for us to buy in, and then when the stock split happens, we get a full 8 shares of this from buying just one. But remember, it's still the same value as if you would have bought the one. So like I said, if you want to get in anytime or just wait for the stock split, then that'll be your choice. Like I said, not financial advice, but I'm looking at that right there, man. Looking good to 595, 593. If we break this 670 mark, we already at 680 right here in the market close. Now, if we get past the 595 to 593, then we going all the way back down to potentially 445 right there, man, or 444, what I got it marked right there. So we got some big moves coming on this stock market, man, because you see this big run that we had, and then we finally getting a good pullback, a good correction, potentially a stock market crash, depending on what's going on in the world, how long this lasts. But you can get in on these stocks, just not the ETFs, but plenty of other stocks at a good price. Now, like I said, the next one of my other favorites is VOOG, the Vanguard Growth ETF right here, man. As y'all can see, this stock used to be over $500 right there. Now it's down to 421. Depends on you watching this video, but probably the same type scenario with this, man. Even though it didn't break the Bollinger Band, I can still see this stock right here going down. And if we break this, either a little farther down for percentage wise, and if we break my second line right here, my first line we already broke is at 460. If we break this second line that I got marked off at 415, 414 right here, if we break that, then we can potentially fall off the cliff and go all the way down another $100 to 314, man. Not saying that we're gonna get there, but anything in between this range right here, 461 to 414 to 415, I would be buying if I was you, but it's not financial advice. And then if we break my second line and we start going down towards 314, anything between this big long range right here from 415 all the way down to 315, I would be buying this stock. But like I said, man, you can wait for the stock split and get it at an even cheaper price, but the value will still be the same. Now, I want to tell y'all, let's see also what I'll be looking at. I know I like to show the regular candles, but I like looking at the Fibonacci candles right here, man. Give me a little cleaner look of what I'm looking at. You can really see dojis with the indecision at, and potentially could play off of that, your option plays, that is, or your entry or your get out, you know. So with these Fibonacci candles, they give me a clear look, and I always look at the day chart, man. I like looking at the day chart more than I do any other chart. That's what I be charting on right here. But you still got to look at the 4 hour, 1 hour, 30 minute, 5 minute. I don't really like looking at the 1 minute that much, but the day is my favorite, because when I trade these options, I'm giving y'all a little secret. When I trade the option, I do the leaps. So I like looking at the day chart to chart so I can know when to get in and when to get out. But the Fibonacci, they show you the dojis where the indecision at. As you can see right here, we had a green doji. Then that means indecision, even though we had came already down from the first doji. You had three red candles, and then another green doji. Then you had a red candle, then another green doji. Then you had another 2 more red candles. So I'm expecting a third red candle right here on this type pattern. What's going on right here, man? But that's all up to the stock market and what's going on with the world, man. We in this war still, so they're gonna play a big part with this stock market going down. And if the resolution is around the corner, then we can see that big pop. But like I told y'all, man, I got a video coming to where one indicator can tell us when we need to buy heavy in this stock market to get ready for the big bounce, so we can make some bukus of money, man. But the only way you can see that video, if you like, subscribe, and share, and tell your friends about the Brown Tire Opulence, and hit that notification bell so you won't miss the video or live stream when I go live, man. But I appreciate y'all for coming. Like I said, hit that like button, subscribe, and share, and tell your friends about Brown Tire Opulence, man. I'm your host, Money Man, and I appreciate y'all for coming. Y'all already know what time it is. My savages! Money Man and the thing of a T and playing no games. Should I already know my name when I speak in CC Flame. Got my YouTube poppin', man. Like, subscribe, and everything in between. You already know. Money Man. You already know.